Hello. Today we're going to talk about bank reconciliation. Bank reconciliation is a really good control procedure over cash. The bank reconciliation should be prepared by someone who does not take deposits to the bank nor sign checks. This is that separation of duties that gives us good internal controls. Make sure that we have things that in place so that cash cannot be stolen. Okay? Bank reconciliation is necessary to make sure that we have things that should be recorded in a certain time period are recorded then. And the reason that is necessary is because of timing differences between what the company has recorded in the cash account and what the bank has recorded in the bank account. Now, I've had students ask, since we have electronic banking and you can look at the bank's records anytime, do we still need to do a bank reconciliation? The answer is yes. And the reason is that there are things that can be recorded on one or the other that need to be accounted for. The only thing that electronic banking does is that it allows us to do a bank reconciliation at any time just by pulling up what the bank has recorded at that time. Now, most companies do a bank reconciliation at the end of the month, and we often need an adjusting entry at the end of the month to record things that are not recorded on the books, and we'll get to that in a minute. Timing differences means that some things may be recorded on the company's books and not by the bank yet, or vice versa. We may have some things recorded by the bank that the company doesn't have recorded in the books. Some examples of things recorded on the company's books that are not on the bank record yet. First, a deposit that is recorded on the books as an increase to cash on the last day of the month. Put in the night deposit at the bank will not show up on the bank statement until the next day, which is the next month. That is called a deposit in transit. By the same token, we can have checks that are written by the company that are recorded on the company's books that have not made their way back to the bank statement yet. When a company writes a check, say it's to an employee, the employee is going to deposit that check in their bank, and then it goes through a clearinghouse, and then it goes to the company's bank to be paid. That can take several days, even sometimes up to a week. That's called an outstanding check. So it's a check that's been recorded on the company's books, but it has not come back through the bank yet. So it's not on the bank statement. There can also be timing differences going the other way. Things recorded on the bank statement that we don't have recorded on the books. One of the most common examples is a charge by the bank, service charge or whatever, that is deducted from the bank account for some kind of service that the bank is providing. That fee has come out of our account at the bank, but it has not been recorded as an expense on the books. So we need an adjusting journal entry to record that expense and decrease the cash account. You could also have deposits made by a customer directly into your bank account, an electronic funds transfer. You're not going to know that you have that until you look at the bank statement, and it is not going to be recorded on the books because you don't know that the customer paid it by electronic transfer directly into the bank account. So that's another one that's a timing difference of amounts recorded on the bank that are not recorded on the books. Those are the things that you're going to need adjusting entries for. Any timing difference that needs to be recorded on the books is going to require an adjusting entry. Errors can happen on both the books and the bank. People are not infallible. So Errors are also often uncovered doing a bank reconciliation, and sometimes an error also needs an adjusting entry to correct something that was recorded improperly. One common example is a check is recorded for the wrong amount on the books, but when it comes through the bank, it is paid at the correct amount. So you need to do an adjusting entry on the books to account for that difference. When you account for all of the differences between the books and the bank, then you have a reconciled cash balance. That's what the cash balance in the books should be after you make the required adjusting entries. Thank you.